The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 264, Nasdaq's off 25, S&P's up a buck, gold contract up 80 cents, trading $17.81 an ounce. We got silver down 14 cents, $17.89 an ounce. Light sweet crude up 23 cents, $38.72 a barrel. Notes and bonds. We got the 10-year right now down 2 ticks, trading 179.01. 30-year off 13 ticks at 35. No, the 10-year flat at 139.07. The 30-year off 2 ticks at 179.01. And King Dollar right now down 20 ticks, trading 97.413. The euro is at 112. The yen is at 107.73. And the British pound is at 123 to 1 U.S. dollar. Welcome to the week of July 4th trading. Tom O'Brien, what's going on?
I like 4-day work weeks in the trading world. Why not?
There's no doubt, man.
Totally.
We don't get a lot of them, folks, and we love them. There's no two ways about that.
3-day weekend.
3-day weekend. Market-wise, folks, bottom line is it's tough to catch a bid here. And you are in window dressing, bottom line, the next couple days. So we'll see whether it's going to be window dressing or window smashing, the way this market is set up. No doubt inside the Dow, as you said, Tom, the FAA's got the Boeing testing starting. It will still be months, but the bottom line, folks, is that, it's on the way. That's the real bottom line. You have Boeing putting 96 positive points inside the Dow. You get 3M putting 19, Caterpillar putting 18. You know what's wild, Tom, is that when you look at the aspect of Boeing in general and the 737 MAX, right?
Yes.
That was a monster deal, but now because there's the COVID and all this, it's like almost like, hey, to me, this thing's just going to go through, man. I mean, it's like,
Yeah, I mean,
it's
the
15
other side
months later, right? It's,
what I was thinking about this morning, too, is so they said people from the FAA and then Boeing as well, right? They got pilots and crews, 3 days of flight testing for the vehicle. And, Boeing employees are always going to have a conflict of interest. That's the very nature of it, right?
Sure.
They work for Boeing. The FAA, though, I imagine whoever is there representing the FAA, and I'm sure it's more than one person, that every decision you make is going to be so highly scrutinized if anything goes wrong that I anticipate, that they are really going to be giving this plane everything they can from that standpoint because it's gotten so much attention in a good way. That it will go on.
There's no doubt. And if you read the press release, folks, so this is what happened. Boeing, for years, has always been able to actually certify their own planes. So a Boeing engineer, the bottom line is send it in, FAA would put the stamp on it. That changed like 4 months ago. That being said, in that press release, and when I sent you that article, Tom?
Yes.
Inside that press release, what the FAA said is that we still have the right to do that. But it looks to me on that press release that what's going to happen on the first couple planes, folks, is that the FAA is going to be right beside them in the cockpit as they're doing it. But when I read through that, it's like, okay, they're not going to be there on every plane. That's kind of how that press release reads, because they're saying they still have the right to be there. And so it's like, okay, well, it is what it is. But the bottom line, that's what's putting energy into the Dow out here today. NDX 100 is a different ballgame, man,
Oh, I know. A lot of green everywhere except the NASDAQ. What I did think about this morning, though, is because I saw that even right in the last 15 minutes as these markets dove lower and then kind of popped from 945. The NASDAQ basically at all-time highs pre-COVID right now. As you know, it's like it can't keep up, but it's sitting at, the NQ is like 9,800 basically.
Yeah, no doubt.
Just for some context, right? Because I did the same thing. I said, why is the NASDAQ? Oh, the NASDAQ's weak. I say, wait a second, like give it some context, man. It's basically at all-time highs before COVID.
No doubt, no doubt.
Yeah.
And it's got to get under 97.57. Right now you're at 97.98, folks. We hit 97.28 this morning. With that number, I'm going back to February 20th. That's the,
Yeah. And Boeing, just to tie back even to Boeing, right? Boeing's interesting, and that Boeing's going nowhere no matter what, man. I talked about it on my program at 8:30, but I just thinking about everything. We talked about American Airlines last week, saying, guess what? We're going to start selling every single seat in the plane. Those airlines are in big trouble, man. It's this thing. We're in Florida. We see it raging. The numbers come out pretty soon about what they are yesterday. It's almost like we're hoping that it stays at 10,000 cases a day. Nationwide, it's 45. Boeing's going to be around. The airlines will be around, but I don't know if they're going to be around with the same ownership in terms of if they survive this. I mean, bankruptcy's out there, man. You are not going to be filling planes. I mentioned it, right, as Floridians. What if I had a wedding in New York? I can't go there. You have to quarantine. It can't happen. There's just it's that has to reverberate in some capacity for airlines when you just can't travel, literally.
And, when we're talking there, we're basically talking retail travel.
Yes.
The business travel, folks, dynamically, my take is totally changed, and that's where all the money is for airlines too. That's
it's huge.
Business travel. These companies are realizing they can bring more money to the bottom line. Travel's expensive. You get the travel, you get the hotel, you got the productivity. Okay, where's that at? We're gonna that business travel is going to be. I think it's just changed. Period. I mean, 3, 4, 5 years from now, there'll be more people. Yeah, you're going to have more people traveling. But the reality is that the real gravy is not there anymore. So we'll see how this shakes out.
And I think I saw that it was some big equity. They had basically missed a payment on it. It was like BlackRock or one of them, and they were missing payments on like business hotels, business hotel, business travel, like. You're going to see people just like cut and run because they got slashed so much and it's not coming back. And so you probably don't even have the equity. You probably don't even have equity because it's like the assets, the value of those assets got recalibrated so quickly. And there's no way that they're going to function that you thought they were anywhere near like future levels. I mean,
right. And,
Slack.
We had talked about Barry Steinlich, that's Starwood, on Friday.
Yes.
And I went over that interview again. It's a great interview, folks. Listen to it. Because picture this. He's one of the biggest owners of hotels in the world, if not the biggest, okay? And when I listen to it again, it's like pretty amazing. So he's expecting, this is a hit of 25% on commercial property. And in New York, he is expecting 40% hit to the buildings. 40. And now, picture something, folks. This is a guy that owns the buildings, okay? So what's so cool about this, and not only that, he started out, folks, in the savings and loans, which is in the 80s, okay? This is a guy that has been on both sides of it, meaning, you get downdrafts all the way down. He bought and sold those bonds, got into the real estate business in a big way, runs billions and billions. I don't know. It's a monster number. And when he lays it out, it's just common sense. It's not even like, he's just like, hey, man, this is trouble. This is what we think is going on. And, it's one of these deals. What I thought was so cool about it, he's facing it head on, though. Right head on. Do you know what I mean? It's not like one of these things that, hey, this is going to get better. His take is that no matter what happens, even when the vaccine comes in, okay, this has changed. New York City has definitely changed. What I was talking about, I got the headline, Blackstone skips a payment on $270 million hotel loan. So that's, basically saying, no way, man. We're cutting the losses. Yeah, stay right there. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up at 336. You get the Nasdaq up 18. S&Ps are up by 10.5. And so let's go over inside this gold market. So I want to go to Vista Gold, folks. Okay, so I've had Fred Ernest on a few times. I know Tiger's owned Vista Gold. I happen to own Vista Gold, but I just want to go through this with you just in case there's questions. So Vista Gold on Friday, you see that volume, 1.5 million? It's a monster number.
Yes.
So what happened here is this. Vista Gold signed an amendment with a broker-dealer that they can sell 25 million shares at market. Now, what this means...
I only know... Sorry, because I read your gold report today. Go ahead. Keep going. Sorry.
So what this means, folks, okay, and not just Vista Gold, a lot of equities are putting these deals on a shelf, okay, that you can sell at market. This is a new way to basically, you can sell into the market anytime you want. You don't even have to do a secondary, so it's an at-market deal. What an at-market deal means is that the broker-dealer has the right to sell shares anytime when, now this is where the kicker is, that the company themselves would have to say, okay, sell some shares. So just to clarify things, Vista Gold already had a deal with the broker-dealer prior to this for 10 million shares. Well, they never exercised it. Now they get a deal with 25 million shares going into the future. So this is the yin and the yang of it. The bearish part of it would be that, yes, they can put 25 million shares into the market anytime they want. The bullish part of it is that they never did that in the past 3 years, which they had the deal also. So
Sure.
I just wanted to go through that. So I suspect, I got a couple questions on Friday that I hadn't been able to answer because it was at the end of the show. So that's what you have happening inside of that market.
I mean, it would almost be akin to taking out a huge revolving line of credit that you probably don't plan to tap, but that you're potentially going to tap if things get worse than you anticipate they might.
It's important to have. There's no doubt about that. It's definitely important to have that you can just pull the trigger, and whether you're collecting, $1 million, $2 million, $5 million, whatever that is, there's no doubt about that.
And I didn't even realize it goes both ways, right? If things go too far out of whack to the upside, maybe, that they'll issue some to raise some capital. Companies do.
That's the danger. There's no doubt. You get a run going topside, and that is the danger.
It does limit some of your upside, man. Because just like investors, you see it all the time, especially in COVID, right?
Yeah.
Shares trade like Zoom or whatever. Didn't they come out? I mean, just companies skyrocket, and executives say we're going to issue some shares.
There's no doubt, man. Yeah. I mean, that's cash right to the bottom line.
Sure.
There's no doubt. Now, if we get over to the gold market and take a look at this, in fact, it is in the gold report, folks. And if you haven't test driven the gold report, go do it. It's a great time to test drive it. You get it 30 days free. If we take a look at this market here, what we have happening is that we are pushing these highs, and we have juice behind the move. The highs we're talking about is 1789. We hit 1790.40. This is a nice setup. You've been pushing them for quite some time. If we go over to the dollar, what you're going to see inside the dollar's flat right now, I think. Yeah, we're up 62 ticks. So what the dollar did do out here this morning, rejected lower price. Bottom line, the way this is set up right now, it looks like, okay, it's going to try to make another run for the top of the range, which was weak in the first place, which is the 97,739. Now, it failed on Friday. 97,682 failed on a big way. If we go take a look at the correlation of that, the euro, bottom line, looks to me wants to go higher. What is putting strength behind the dollar is the pound. The pound, the pound is a lot less weighting structure inside the dollar index, but the pound is down 49. You're trading at 122, and the pound looks like it can go to 120. So you're going to get some variations coming out here this week. What we do have is that Thursday at bottom line, 1:30 pit time, 4 o'clock, Eastern Standard Time. Gold market closes in the U.S., and the U.S. runs the deal, folks. Okay, so.
Sure.
It's going to be intriguing seeing how we shake into it. And I heard you on that I guess we get now job numbers on Thursday now, huh?
Yeah, we got a lot of economic data, man. We have some important economic speak tomorrow. I believe it's Powell and Mnuchin speaking in front of the House or the Senate. On Wednesday, you get Fed minutes released. And then on Thursday, you get weekly jobless claims, initial jobless claims, and you also got non-farm payrolls for the whole month of June, man. Really cool to have that happen and then have the market try and decipher what to do going into a 3-day weekend, which you're already dealing with, as I mentioned, spiking cases. You have, I believe, somewhere over in the West Palm area, they're shutting down the beaches, Miami, right, for July 4th. Yeah. Over here, they're going to be wide open as this thing is raging. And what does the market do if it comes to the realization, right, that, hold on a second, man, we're going into a 3-day weekend where areas like Florida are going to start ramping up how much they're congregating at the beach as these numbers go. I'm talking about it because there's a real potential to say, you know what, man, we're not going to wait for Florida to have 20 or 30,000 cases a day and have the whole place have to shut down over a 3-day weekend. And that's a fear. The probability of that fear coming into the market, in my opinion, is much greater than zero. Not sure how high it is, but it's a tail risk, and it's there, man.
Oh, there's no doubt.
Yeah.
Home sales, big number, folks. Okay, pending home sales post record gain. Let's see. The index of pending home sales increased 44% to a 3-month high of 99.6 after falling in April to the lowest level records back in 2001.
Yes.
The medium projection was 19.3. There was a huge bent-up demand, folks. Okay, I can tell you, in our construction business. The bottom line is that when COVID hit, we didn't get one call in 6 weeks.
Yeah.
And that's as about a month ago, and then I've been going 24 hours a day since. So there is the demand in a huge way. And, it makes sense for a lot of different reasons. I'd say one of the biggest reasons is that no one was out there, so you get that demand coming back. Then you get the demand of the aspect of people making choices, meaning in the context of where do they want to live? Are they spending more time at home? All of that, okay? And then, of course, it's the interest rate. The interest rate structure, it's, we haven't seen it better in our lifetime. Let's put it that way.
Yeah, so average rate 30-year came out 3.2%.
Right.
That number.
Right.
And I was just going to add Florida, man, because there's going to be winners and losers, right? Like, Can you imagine being a huge owner of real estate in Silicon Valley, where all of a sudden every engineer can work anywhere in the country versus we are in Florida, one of the, if not the best beach in the whole country, man,
With zero state taxes.
Zero state taxes.
You know what we do have, though, folks? We have high property taxes.
Sure.
It's so intriguing that, when you say that, we all say that we get zero, but our property taxes are freaking huge. So that's, that makes a difference. But guess what? We're not paying 7.5% state taxes, which is huge. That's a whole different ballgame. You know what I mean?
That's just going to be strength in a huge way in this sector. Because, the one thing that did jump out at that is just percentages on low numbers can be misleading sometimes. So huge record rise, but sales were down more than 5% from a year ago, even with some of that pent up. So I wonder how some of the numbers in Silicon Valley, in the Pacific Northwest, man, by Microsoft and all, by New York City, my goodness, right?
Oh, yeah. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow. Dow's up at 342. NASDAQ is up 32. S&Ps are up 13. And, folks, stay with this real estate for a second. If you want to see something that is so cool, man, this is a brand new deal. It's called, let's see, First Street. It's the First Street Foundation. If you Google firststreetfoundation.org, what you're going to see, this is you can put an address in any place in the whole United States, and it's going to give you a probability going forward 15 to 30 years. Well, first off, what it does is this. It gives you the probability right here, right now, of real estate flooding, and then into the future. So if you're in the real estate market, if you're going to go buy a house, check it out, okay? Because it's a monster deal. People are really paranoid, and they should be paranoid about the flood zones in general. This is one that's going forward that is really cool, because as technicians, let me tell you something.
So, can I just add, because I pulled it up, so it's firststreet.org, I believe.
Yes.
I have it up there. Firststreet.org, and then it'll bring you right to that, which you have up, floodfactor.com.
Right.
Pretty cool, man. It's important stuff.
It's huge.
Yeah.
Because depending on where you are, folks, okay, my take on this is that, the bottom line, some places already, if you go over to South Miami, North Miami, they flood like, if you've never seen it, folks, okay, it doesn't even have to be raining out and they're flooding already. The cool thing is that real estate is a long-term deal, so you really want to be careful in the context of what you're doing, because the prices will go down. That's like not
it's
even
a great
close.
point.
Yeah.
It's great, man. So when I was looking at places, I'm fortunate in South Tampa, but I'm in an area of South Tampa, and I'm searching mine already on the screen off camera to see. But when I look at places and I talk to people, I say, if you're buying, even if it's an investment property, right, and you're buying it for 10 or 20 years,
right,
and you're buying it in a flood zone,
right,
the chances over the next 10 or 20 years that a flood occurs in there, now you're going to have insurance, okay? You might be made whole, but you're not going to be made whole. And do you want to make that choice where there's a high probability you have to endure that 1 year, 2 years, something like that, where things just get wiped out, there's flood damage, you have to collect insurance, you have to rebuild it, you have to do everything. The likelihood that happens in a flood area over that period of time, I think, is substantially higher than most people realize.
And you're paying for it the whole time.
That as well.
What
well.
happens, folks, is that the way flood insurance, you're paying for the whole time.
Yes.
All you have to figure out, just look at any city and look up whatever city you're in and look up at the biggest buildings, and the insurance companies own them. So guess what? You're paying for it. And in the future, it's really important. I can tell you from being in the business, even in St. Petersburg, we have a couple flood zones. And in those flood zones, even in the aspect how the real estate is going up dramatically in the city, guess what? That flood zone is not going up. They're getting out of that flood zone because of the fact, never mind that it's flooding, because of the fact that the insurance premiums are going up so much. So anyway, it's a great little tool.
No, we should all be aware of it, man. Yeah. Because what really gets dicey is I know I'm on a high elevation. Tampa Bay, we know, very flat, right? We're in a bay, very, very flat. Not a lot of the high areas in terms of the water flow. And where I am, I mean, it's putting some decent risk. I'm substantially out of a flood zone, and the scary part is...
I know, and you're right next to it.
What happens, though, because I'm at 12 feet, man, 15 feet.
Right.
The amount of real estate that is under that level in the Tampa Bay area is substantial. I'm super elevated for the area, right? You know what I mean? And so that's where things...
super elevated even for 3 blocks away from it, which is pretty cool.
That's what I mean. It's almost a straight hill in an area that's very flat. Right. And so I'm in the middle of that South Tampa hill. but it's dicey, man, when you look at how many homes could be hit, and we see certain areas, Texas, right? One of the areas.
You might have waterfront in 20 years.
Oh, boy. I hope not for all the people in between, man.
No, for sure. Oh, my God.
Yeah.
Yeah.
But it's real, and you should think about it.
What is the name of that boulevard, anyway?
West Shore.
West Shore Boulevard. That's the name of the boulevard? Yeah, right.
Yeah.
Right. So,
longest sidewalk, continuous sidewalk in the country, I believe. I think it's like 7 miles that it stretches.
Yeah.
It's beautiful.
There's no doubt. Yeah. Absolutely gorgeous.
Cool. So what do you have? firststreet.org?
Yes.
And floodfactor.com. Pretty cool, man.
Yeah. And what you're going to see, now this is what's also going to happen there, folks. I suspect FEMA is going to catch up with them. This is a private deal, nonprofit that scoped this whole deal out. And trust me, FEMA is going to pick up with them, because the bottom line is that for the amount of money that FEMA keeps putting out, every time we hear a flood, that's what it comes down to. And the thing that's interesting about this is not so much, folks, let's say if you're in the middle of the country, as you're listening to us, you want to pull it up also, because what does happen is this, is that, needless to say, whether it's the bays or the oceans, that's coming in. What is the sneaky one are the rivers that are in the middle of the country, that when they go over, what ends up happening?
Sure.
That is really a sneaky one in the aspect of, you don't think you're in the middle of a flood zone, and all of a sudden, you get that thing happening. So. And
when you think over time, man, they put my 1 year between 1% and 2%, but you get out to 15, 20 years, you're approaching 30 to 38% chance. We talk about these the probabilities of streaks. Well, the way you have to think about it is you basically have to win every year, right? You have to beat the odds every year. So even if you have a 98% chance, 99% chance of no flooding, you run those odds over 30 years, man. A 1% chance is a huge chance over 30 years.
Oh, yeah.
Those types of even, and the key here is, those chances are accelerating. The numbers right now, and that's probably where these factor in. It's like, don't go off on the chances right now for 30 years, because the chances are going to accelerate in 10 years and 20 years, right?
Right. And what you're going to have is that more people are going to get educated to the fact.
Yes.
People, let's say that you and I were just buying a place right now, right? If I knew about this, I'd pull it up and say, okay, hold it. I'm just starting a family, right?
Yeah.
Why am I going to live here for 30 years when my chance goes up? And
I can tell you personally, when I was buying a house, I would not buy one in a flood zone, period. Yeah. There was no reason. There's too many beautiful places not in one. Why would you put yourself through that? Because I thought the same thing. I'm going to be in there 10, 20 years. I don't want to buy it because I don't want to deal with it, and there's a high likelihood over a long time it happens. So that's awesome, man. I hadn't seen that website.
And it's wild, folks. A picture in Florida. I bought a house in a flood zone. The differential is if you're buying in a flood zone in the water, what you know is that, you have to go up, and you know what you're buying, and you're in the water, okay? Where the problem comes in is that the person that's across the street from you, they're paying, they're not even on the water, and they're paying a huge premium. So it's like, for what? Do you know what I mean?
There's a difference being that one house on the water,
right?
When
it gets twisted. Yeah, exactly.
Right, when you're 3 houses back and you got no view of the water, but you're still paying the same exact premium because you live 10 feet from the ocean. And we're talking because we live here. That's what it is.
Surrounded by water, which we love. Don't get me wrong. I brought this up because this is a numbers game, and on a longer-term basis, it's pretty cool that you got a simple tool that we all can use. You know what I mean?
And some people might say, man, I want to live there. I want to pay it if it happens because I want to live on the water. Totally. It's perfect. Just it's perfect. And I'm one of those people, man. I can do that. Sure.
For sure, man. You're up 12 feet. The water's going to be still worth more money. But guess what? You don't want to be across the street from it. You got to be up 12 feet. Then you build the house. Then you go from there.
And at least you know the odds.
Yeah, big time. Dow's up by 390. Nasdaq's up 49. S&P's are up 19. Stay right there. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow. Dow's up 396. You get the Nasdaq up 51. S&Ps are up 19. And let's go take a look at Facebook out here, because what we did over the weekend, you did have a few more companies come out saying that, hey, listen, man, we're pulling advertising. Yeah. And what some of them have done, folks, okay, this is where I suspect the rest of these social companies are saying, man, Facebook is bringing me down too. You know, Facebook traded to a low of 207. It's come back 9 points. It's flat right now.
It's positive for this. I know.
Yeah. But what you had out here is that, let me just see how this, because I believe you had.
I think Starbucks came out.
Yeah, you had Starbucks, Levi Strauss, Pepsi, and Diageo over the weekend, saying they're curtailing Facebook and its peers. This is where you know,
Twitter got lumped right in there, man.
Yeah, folks. Okay, the bottom line, you get analysts coming out saying in the long term it's not going to make any difference, and we'll find out. I mean, Facebook is so powerful. There's no doubt about that. But let me tell you something. When you're talking about these types of budgets, they're out there to sell product, and if they think that their brand is getting hurt in the context of Facebook or anything else, the brand is more important than anything. So
when push comes to shove, basically, right?
Yeah, and we'll see where this shakes out. So what Facebook has done, let's see,
monthly chart even.
yeah. So on a monthly chart, I mean, it's got to get it's got to get back over 218.62, which has started over there. No, it didn't start over there today, but that's the number. You get back under that number, and guess what? Then you're at the lower end of consolidation.
I mean, if you showed me that monthly chart, right, and you told me, yeah, right now in the current month, companies are ripping money away from Facebook, I would literally look at that last bar and I'd say, why isn't it reacting? As in, it's so muted, you know?
Yes. No, there's no doubt. There's no doubt. And, you know, that's...
So how about, can we jump to COVID real quick? Only because Florida, they release their numbers usually by 11 a.m., so they're out for yesterday. And I'll pull back in the total number, so people, I'm sure, will see the headlines. Maybe you saw it over the weekend in terms of almost 10,000 people every single day, man. Back down to 5,409. Pretty remarkable. We're talking about 5,400 people in a day. But the thing to keep track of here that I always look at is how many people were tested, right, and what's the positive rate. So there were huge surpluses, and I don't know how this comes in terms of the reasons for why you had 71 and 78 and 72,000 people tested for the 25th, 6th, and 7th. But going on Sunday, I guess not as many people, even if you might thought you want to get tested. Sunday, low numbers, 41,000 tested, but the people positive actually above any number that we put up for the 3 previous days at 13.67%. So maybe just one thing, speculation, right? But when you see 41,000 people tested versus 70 on the days prior, it's Sunday data. There has to be a decrease in Sunday data. Sunday is Sunday, a day like none other. But that number, the highest going back to only 1 day higher, folks, okay, the 23rd. So don't be lulled. Even as a market participant, to seeing that number, you're going to see headlines. You're going to see that the number came down almost 3,000 to 4,000 people. And I wonder how much attention they'll give to this, hopefully a decent amount.
Well, when we brought up last week, I was bringing up the context of, I know these couple of hotel owners in St. Pete. And if you remember the story, folks, what the story is that you have companies that are coming into all the business establishments, asking them, do they want all their help tested for free? And the establishment themselves can say yes or no. So when I was talking to these guys, well, it's a week and a half ago now, the bottom line, that's that they were saying that, hey, we're going to see these numbers go up because there's many hotels that say yes. And that number there could just be saying, well, guess what? They took off Sunday.
Oh, it just makes sense. Even if you're feeling a little bit under the weather Saturday, maybe you want to go get it figured out. If it comes across Sunday, maybe you say, maybe I'll do it Monday if I'm still feeling sick tomorrow. That could be enough, along with just like you're saying,
the thing that's intriguing on this, the way this works in these businesses, they come to the business.
Yes.
People don't even move. They come to the business every single day and line it up. Do you know what I mean?
Yeah.
So
it's stark numbers, man, and huge numbers going on right now, whether it's in Nevada, Arizona, Texas, California. So just big numbers, man.
No doubt. Yeah. So market-wise out here, hey, listen, on Friday, folks, this is, so the probability that we're going a lot lower, to me, it's gone up dramatically. And this is why. When you see these numbers, first off, what happens when you come off highs, folks, and you have big volume, it's a big number. We did 3.2 billion shares on Friday in the NYSE. Okay, you don't get those numbers. Watch this. We got that number on option expiration the prior Friday, 3.5. But guess what? It wasn't the monthly option expiration last Friday, 3.2. Yeah. Now wait till you see this one. This one's the Nasdaq. They were moving Nasdaq stocks out of the way like beyond belief. Nasdaq, it was a higher number than option expiration, and it was quad-witching the prior Friday on the 19th. We did 7.25 billion shares.
It was a big day.
It was a monster, man. And so what you'd get here is this. Coming into this week, might take this week, we're just going to go sideways. We're going to build some cause for lower price. You got window dressing happening. We get four days of trade, and that's it. I really don't expect a lot of action this week. And if that's what you get, if we just crawl higher and you go up with light volume, that's the doom. That's the doom. So we'll see where the whole thing is shaking out. You also got let's go take a look at some of the higher volume equities out here. Oh yeah, we should do. Well, we'll do Chesapeake Energy afterward. Chesapeake Energy went BK, folks.
Yep, shale. Watch out.
Yep, that's they bottom line, they were one of the first ones in the business. Gave out huge checks when this was happening to folks all over the country, and then just basically imploded. And
cruise at $40, man. It's a tough deal trying to pull shale and compete.
That, no doubt. And what you're going to see out here, NG, is that this is my take. NG. Let's see. NGU. Let's try NGU.
Maybe Q?
Yeah. That one maybe?
U?
Yeah. Okay. There we go. What you're going to see, natural gas is moving. And it's a big move. Now, this is where, the bottom line, you get one of the major gas pipelines in exploration is going south, and we just went from 158 to 176 now. Isn't that weird?
It's craziness.
Yeah. Yeah, no doubt. Yeah, so we pull up Chesapeake, and, they just halted, so they're not even trading.
Yeah.
And if you take a look at this chart, where do you see this thing? This is like hard to comprehend. So in 2008, it was at $13,998.
With a few splits, reverse splits
slightly,
in between.
Right?
Yeah, exactly.
Well, look at even the last high. The last high was in 2014. It was $5,984.
Yeah, that's 6,000 to 11. The same way to say that is from 600 to $1. The same way to say it is $60 to 10 cents, man.
Stocks only go up, right?
That's right, they do.
Stay right there. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 417, Nasdaq's up 50, S&Ps are up 20, and one of the Boston Dan from the Tigers Den folks did remind me that on Friday there was a rebalancing of the Russell indices, which absolutely could have put a lot more volume in the market. That being said, what does happen is this. If you get volume, for you bulls out there, what should have happened if that was going to go higher, that you'd have needed a higher day. The bottom line is that we went lower, you have volume in the deal, and what I've seen over the course of time, whether it's option expiration or rebalancing of indices, volume is volume. And which way you go on that volume has the indication of which way the market wants to go. So it's going to be a cool week. I mean, July 4th is a great holiday, man. So it's pretty cool in general.
Definitely.
This gold contract wants to break out, folks. Okay, this is going to get really intriguing watching this thing shake out. We're up at the top of it again, 1786, and the bears are selling into it. There's no doubt about it, man. Each time we're up there, they just So we'll see where the rest of it's going to go. But my take is that, well, here, let me show you something here, because this is pretty cool. The XAU has already broken out of its consolidation. When you see this, this is important to wrap your head around. So it's a 3-year consolidation. Well, no, 6-year consolidation we're in. I actually said 3. It's a 6-year consolidation. The XAU broke out. That's 114. We're at 123. That's saying the XAU is going to make the run, whether it's 196 or right for the highs. The Gold Bugs Index is still waiting to break out. Now, when they both break out, guess what? You can have a whole different ball game, folks, okay? And it will be a very fast move. The breakout in the Gold Bugs is 286, and we're at 281.61.
Okay.
Gonna love it. Listen, folks, stay right there. We got Think or Swim coming up next. Then I'm Mr. Mr. Basil Chapman, riding that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.